from this Fed rate cut for a little while. Let's talk about a mainland place. They've really been getting bashed up quite a fair bit in recent weeks. Do you think that some reprieve might be in store for them coming up?
Yes, certainly on the basis of the fact that the interest rate sensitive stocks are proving to be too volatile for investors, and basically the fundamentals for the China play still remain very attractive on a broad base. That is, China has very strong GDP growth expectations still. In fact, China and the US were the only two economies to report an actual increase in growth rate in the first quarter. China reporting a growth rate of 8.1%. Also, WTO, of course, will be coming up, if not in June, then certainly in November. But just to be cautious a little bit, for instance, if we look at the 8-share performance, although over the year they've only been up 29%, if you take it on a non-market capitalization weighted basis, the 8 shares have been up over 70%. So it's mainly the smaller 8 shares that have risen. If you are going to buy 8 shares, it would pay at this point to be buying the larger market cap 8 shares. So be a little bit selective in the China plays that you invest in.
Thanks very much, Lachlan. We'll talk to you again sometime soon. That was Lachlan Christie, CEO of Typhoon 8 Research.
China Mobile is due to release earnings in a couple of hours. To preview, Lachlan Christie joins me from Hong Kong. He's the managing director of Typhoon 8 Research. China Mobile's revenue grew at an average 50% a year in 4 years in 2002. Is this growth sustainable going forward?
We think so. The company is obviously growing its subscribers by acquisition as well as by organic methods. The company is also positioning itself well by increasing its market share and increasing its subscribers ahead of any potential 3G license issues. So the earnings growth in the company should continue to be sustainable throughout the next year.
The Chinese government forecasts the economy slowing to 7% this year. What impact may this have on mobile phone demands?
Well, we think in the case of China Mobile, the impact will be limited, mainly because they are continuing to carry out an acquisition strategy that will continue to increase their revenue growth. And although their average revenue per user will continue to decline slightly, this will be moderated. But with an increase in the market share and a larger number of subscribers, the growth prospects for China Mobile should be able to push through any economic decline over the course of this year.
A Bloomberg survey shows that the average monthly bill of China Mobile's customers probably dropped 6.6% in the fourth quarter. That's half of Hong Kong's smartphone telecommunications holdings. Should China Mobile be looking to boost that?
Yeah, they obviously should be trying to increase their average revenue per user. They're doing this by increasing the minutes of use, MOUs for per subscriber, by offering discounted bucket deals in terms of low discounted large amounts of minutes. This is helping to moderate that decline in average revenue per user, and we should see that continue to flow through into the earnings.
You've rated China Mobile a buy. Why is that? What are some of the risks investors must expect?
Well, there are some clear risks with China Mobile, the main one being regulatory risk, which has been around for a while and will remain. Also, in order to sustain its subscriber growth, a significant amount of capital expenditure is needed, and this obviously creates some earnings suppression through the effect of depreciation. But however, these risks have been fully compounded by the market. They've been available. The information has been impacted into the market price for quite some time. Additionally, the Netcom IPO later this year may create some downside risk to telcos in general as a substitution effect, but again, that's already been compounded into the market price. And we think the company's trading at 11 times 2005 PE versus the Hang Seng Index at about 13 to 14 times. We think the company's still remains oversold and has a significant upside to about $27.
PetroChina, which is China's largest oil producer, says it's uncovered possibly the mainland's biggest natural gas field. What's your outlook on this particular stock?
Our outlook on PetroChina is definitely positive. This announcement clearly is a positive statement. But having said that, you have to take with a grain of salt announcements by petroleum exploration companies, which PetroChina is more so than Sinopec. They generally do and manage their announcements as to discoveries, and I think it's a fair assessment that this reserve in Inner Mongolia had been discovered before the stock actually listed in April last year, and they held back on making a full announcement on it until it had been fully traded for a good period of time in the market. Nevertheless, the outlook for the sector is good. I mean, the gas reserves of this level, about 700 billion cubic meters potentially, is very good for a stock that's operating in an economy that is trying to switch to using more gas-based products, natural gas-based products, as opposed to petroleum products. So there's no doubt that even in addition to oil revenues, there's the gas revenues are going to be substantial for the stock. We still see you can buy it well up to about 170, 180.